Okay, so this is going to be the second part in the mini series on how to choose the right supply and demand zones. If you haven't seen the first video, I'd recommend checking that out. It's on inducement. And once you've seen that, you can come back to this, and I'm going to be talking through a different thing that you should look for, and it's going to be liquidity, which will definitely help improve the probability of your zones playing out. And I know that the first part of the series was also on liquidity, but that was more looking for liquidity to spot inducement. And here we're going to be looking for liquidity at the start of moves to give us some confirmation that the trend is going to continue. And I'll first be looking at the theory behind it, and then I'll be looking at two examples on USD CHF here that I looked at. One of them played out, one of them didn't, and that's okay because as long as you have a positive risk reward compared to your win rate, so as long as it averages out that every trade you take has a positive expectancy, then in the long term you're going to be profitable. And so even strategies with less than 50% win rates, I have some strategies that have 30-40% win rates that are still profitable in the long run. So as long as you know that it will play out and you have the discipline to keep placing the same trades over and over again, then you'll be able to be profitable. So let's get into it. You would have seen me draw something like this probably quite a few times if you've seen my other videos, but I would just do it once again just to really get it in your head. But this is going to be the textbook demand zone and textbook supply zone in the other direction. But you want to see something like this before you get confirmation to go long. You want to see these lows taken out and then price push up, and then you're looking for pullback to your zone, then take price to this new high and create another leg up. And while this setup is great and it does work fairly often, seeing it perfectly like this isn't always going to happen, and you don't have to. You can just see some liquidity get absorbed, and then that will give you your confirmation. But the reason that this gives you confirmation that we're going to go long is because when liquidity is absorbed, it means that a lot of buy orders were placed in this area here. And the people that are placing these big orders are the big institutions. So you can be fairly sure that when this happens and you get a confirmation that liquidity is being absorbed, sells a lot of liquidity here, and then price pushes up, you can expect price to continue up. Maybe it will continue up and not have a pullback and then reverse somewhere up here and take out this place, and that's fine. Sometimes that does happen. But if you get a nice pullback to your zone, then that's good confirmation that either enter straight from your zone or, as always, go to a lower time frame, look for some entries, get higher risk reward, and take it up. And just in case you're still not too sure with liquidity, the reason that this happens is because there's liquidity resting below these lows here. And what that is basically is an accumulation of orders that sell orders in this place. That means that the big institutions can buy here because they're placing lot sizes a lot bigger than what you probably are used to. And so they need a lot of sell orders to be able to fill all of their orders at the right price, because if there's not enough liquidity here, half their orders might get filled here and then half a bit higher. And they don't want that. They want to get the best fill on their price. They want to get the best fill on their trades. So they're going to wait for enough liquidity or manipulate price to give them liquidity to then take price in their direction. And as I said, you won't always get this perfect setup, so it's good to look out for other stuff. Something you could see is a low formed, and then just this low taken out, and then price push up, back to the zone, and then take off again. That's something that's fairly common. And sometimes you even get two liquidity grabs, which can be a bit annoying, but if you're waiting for them to play out and break structure in the other direction to then return, then it shouldn't be a problem. But you could have something like your low liquidity grab, then price comes back down, takes out this, and then pushes up. And that's a new move that you want to maybe look for some inducement and then get in on. So I know this can be quite confusing. Hopefully you can understand it a bit better. This is going to be what you're looking for. If you can understand this setup on the left, then these ones will become more clear in the charts. But if you just look for something where liquidity is taken, and then that's going to give you confirmation that your zone is going to hold, or at least there's a high probability that your zone will hold, rather than just trading any old supply and demand zones. So we'll just go back into the charts, and I'm actually going to show you a setup that looks like exactly like this, that I also sent to the Discord group. So it was on the 45-minute time frame, and it was on GBP out a while ago, but I just remembered about it, and I think it's good for you to see that sometimes you do get these setups. And so over here, you can see it's exactly the same as what we had earlier. Equal lows, get taken out, and then price shoots up, pull back to the zone, and then you can go long. This one didn't play out perfectly. We still got a rejection, which did give some good trade opportunities, but it wasn't the start of a new trend. But that's probably because it's a lower time frame. You can see the overall trend has been bearish. Chance of a trade reversal on the 45-minute time frame isn't going to be as likely as, say, on one of the higher time frames like the 4-hourly. Nevertheless, you could have entered just straight from the zone and just made a couple percent or whatever. 1 to 3 taken. But I just wanted to show this quickly of how the setup can look in the real charts. And I did see this in real time. I'm not always just looking after the fact. If you don't believe me, you can join the Discord and scroll back in my watch list to the 5th of January when I posted it. So around here. And obviously, actually, that would have been entered there. So it wouldn't have reached 1 to 3, but 1 to 2.8. Or maybe you could look for some lower time frame entries. But the main thing is you can see this zone did hold a bit, at least. So there were a lot of orders in this area that then when price came back to the zone, took off again. Obviously, just not enough orders to break the structure and continue upwards. We'll go back to the main point of the video, which is on USD CHF on the 12-hour time frame. And the first trade that I was looking at was over here. You can see this is like a double liquidity grab. So you've got some liquidity here, gets taken, and you can tell it gets absorbed because price pushes up and then straight after gets pushed back down. As you can see, there's not really any supply zone that you could trade from here. And so there was no opportunity for me, but I just waited and waited. And then as you can see over here, we got the second liquidity grab. We can just mark that. And this did provide a nice supply zone to get on, and it did get tapped very nicely before selling off again. As this is what I was talking about, sometimes you get your liquidity here that gets taken, and then sometimes it'll get taken again, and then you are given a supply zone that you can trade from, or obviously a demand zone. If we just flip the chart, then you can see, looks like a demand zone now. So this is always quite something good to look at. You can just flip the charts in trading view. If you're better at trading demand zones or you're better at trading supply zones, it's something to consider, but it's probably better to get used to trading both supply and demand zones and being able to see which direction the trend is actually in, especially if you're looking at multiple currency pairs where there's some correlation. You don't want to be looking at this chart thinking the dollar's bullish, so you're going to short Euro USD, so don't get confused with that, but it's just something cool to look at. So this was the first example that I traded. Hopefully you understand it. If you don't, leave a comment down below and I'll try and help you out, but the main thing is liquidity was taken, so that reinforces that this supply zone was more likely to hold. And as you can see, it did. This is then the second trade that I was looking at is over here. Again, you can see price pushing up. So you can see this weak high here, which, as you know, weak highs like to get taken, and you can be pretty confident that once they get taken, and if they do get taken and absorbed, then price is going to continue in its overall trend, which here is bearish, and you'd be expecting a supply zone to form, price pull back to the supply zone, and then continue to be bearish. And as you can see, price took out liquidity here and created a supply zone. So same setup as over here, liquidity taken and supply zone formed, which, as I've said in this video, which is the main theme of this video, once that happens, you get more confirmation that this supply zone now is going to hold. And so I was fairly confident that it would hold. Obviously, you never know, and it didn't, but that's okay. Actually, went down to the 4 hour to refine this zone, but same thing, still didn't hold, obviously. You can use this on any time frame as always, but as I always say, the higher the time frame, the more consistent and higher win rates you're going to get at the expense of lower risk rewards. So just going back to show you the setup, same as I showed in the theory. If we go to a bullish example like I was showing, you've got your low formed here, gets taken out, pushes up, nice demand zone. Obviously it's a supply zone, but here it looks like a demand zone, so you're expecting price to pull back to your zone and then take off. And I actually didn't take a trade from this. I sent to the Discord that I was waiting for something to happen, and it didn't happen. Obviously there was no inducement either. While over here you can see price slowed down. You got this candle below the zone, slowed down, a little bit of inducement, and then price pushed in and reversed. But over here, no inducement, the candle pushed straight into the zone and then took it out. But I was actually down on the 5 minute, and I was waiting for, if you haven't seen my market structure video, I was waiting for the rules of that to be met, which they weren't, luckily, because it would have lost. But over here, we got a liquidity grab into our zone, and from the structure that was over here, I was waiting for this low to be broken, and as you can see, lots of wicks broke it, but like I said in the rule of that video, I'm waiting for a candle close, so I was looking at this supply zone, but I was just very patient. I didn't set my limits because the candle didn't close below this zone, so I wasn't bearish, and as you can see, price just took out not only my refined zone, confirmation zone in here, but also the overall zone that I'd marked up. And then obviously price did go in the direction because we're in a bearish trend, and so sometimes your supply zones will get taken out and then price will continue down, but maybe it wants to reverse. That's something else that I might make a video on when supply zones get rejected. Sometimes it can mean there's going to be a reversal. So you can see the demand zone over here. If it gets respected and this area breaks, we could be going bullish, but that's a concept for another video. But I hope this has been helpful in the second part of the series, and I'll get the third one out soon. But hopefully these two first parts have been useful for you, and they've helped you take more patience and be more aware of the supply and demand zones you're choosing and why you're choosing them. Even if you don't choose to follow my rules, just be aware of the reasons that you have for choosing your own supply and demand zones. And so if you have found this video helpful, then please do leave a like and consider subscribing to the channel. And then last thing is, if you have any feedback on my channel or videos, then please do let me know in the comments. Anything, it can be literally anything. If I speak too fast, maybe that's something I worry about. Or if I don't speak clearly enough, then please do let me know. I've got subtitles now, which does take me quite long to edit, but hopefully that helps if I'm not speaking too clearly. But yeah, any feedback on the channel, just let me know. But thank you for watching, and I'll see you in the next one.